Lovely. Let's make a start. Good evening, everybody. Thank you for attending this meeting of the Governance Committee on Tuesday, the 28th of November 2023. Got a bit of an echo somewhere. Before we start this evening, I would just like to outline some housekeeping rules. There are no planned fire alarms. So if it does get explosive, no, I'm joking. So if it does sound, please leave via the emergency exits. Can I request that all mobile phones are kept on silent and switched off? Thank you. Introductions. It's got it in order as councillors, officers, external auditor, but I'm feeling we'll be more efficient. So we'll just start with go round from my left.
Good evening, Chris Moister. I'm the Director of Governance and Monitoring Officer.
Hello, Louise Martinson. I'm the Director of Finance and Section 151 Officer.
I'm Damien Bretherton, Councillor for Walton Liddell West.
Hello, I'm Peter Gabbett, Councillor for Loster Call.
Hi, I'm Jeannie Waddington, Principal Financial Accountant.
Hi, I'm Neil Holton, I'm Principal Management Accountant.
Hi, I'm Matt Derrick, Audit Manager from Grant Thornton.
Councillor Margaret Smith, New Lonction and Hutton East.
Councillor Peter Bernger, Buckshaw and Worden.
Councillor Ange Turner, Broadoak, Penwitham.
Claire Gornall, Democratic Services Officer.
Evening all, Wesley Roberts, Councillor for Buckshaw and Worden.
And I'm Councillor Colin Sharples, Earnshaw Bridge Ward and Chairman of this committee. I'm a bit croaky, please forgive me. I've had a croaky voice for a few days now. In fact, I see there's a frog in my throat. I think it's an alcoholic now, actually. Right, members of the committee are attending in person here at the Civic Centre. Other members of council may also dial into the meeting via Teams to observe and or participate in the meeting. And welcome to those that have. Please note this meeting is live streamed on YouTube. The web link for this can be found on the council's website. Members on Teams are asked to keep their microphone on mute and only unmute when they wish to speak. And could I remind members to unmute themselves once they have finished speaking to enable the meeting to proceed smoothly. Thank you. Shall we start with apologies? I don't think we have any, have we?
None, Chair.
Thank you. Declarations of interest. Does anyone have any interests to declare? None? That's good. Minutes of the last meeting. I have the minutes of the last meeting in front of me for approval. Are there any points of accuracy on the minutes, and can we propose the minutes for approval? Thank you. Proposed and seconded. And are we happy that they're a true record? Yep. Show of hands. That's good. Lovely. Okay, let's start with item 4 then. Draft audit findings report. And I invite Matt. Welcome, Matt. Matt Derrick from Grant Thornton to present this item.
Thank you, Chair. So today I'm presenting our draft audit findings report on the 2022-23 statement of accounts. I'll just start on page 9, which just gives the summary, page 9 in the pack. So we made good progress with the audit and we're kind of nearing completion. There's a few areas which listed here where we've still got queries and discussions with management. At this stage in the audit, we do anticipate being able to issue an unmodified audit opinion, subject to the outstanding kind of queries and adjustments that still to be processed in the accounts. And I'll come on to some of those areas later in the report. To date, we've not identified any adjustments to the financial statements, but as I say, this is our draft report and we will issue a final report at the conclusion of the audit. Just over the page 10 in the pack. At a previous audit plan issued back in May, we hadn't fully completed the prior year value for money audit work, and so that work hadn't concluded at the time of issuing our audit plan. So in the audit findings report here, we have issued an update to our value for money risk assessment for the current year, which just acknowledges the significant weaknesses that were identified and reported in the previous year, and our risk assessment and planning the conclusion of our planning and risk assessment work, and the focus of our work in the current year is looking at the progress with those recommendations that we reported previously, as well as looking at all the other areas required under the audit code. That work's progressing, and we hope to report soon. There's nothing significant coming out of the work to date, but we will issue our auditor's annual report to management in draft and then to this committee once that's finalised. Just jumping ahead to page 13 in the pack. This just sets out our materiality that's been applied to the audit, and this confirms that our materiality has not been changed from the level we set during planning. The gross operating expenditure in the current year draft financial statements has increased slightly from the prior year. However, because it's not increased that significantly, we've felt it prudent to keep the materiality in line with that we set at planning. This page also sets out our materiality applied to the whole group account, because the council is required to prepare consolidated financial statements incorporating the South Ribble Leisure Limited as well. So we apply a materiality to the council's accounts and then to the group account as a whole. In this case, we see no reason to set a different group materiality, and therefore it's in line with the single entity materiality. Over the page, from page 14 onwards, this summarises our work to date and findings from the significant risks identified in the audit. The first risk of fraud in revenue recognition. Now, this is a presumed risk under the auditing standards, but we are able to rebut it if we deem that that's appropriate. In our audit plan, we did report that we didn't think this significant risk was applicable to the council, and our work to date has not indicated any change to that risk assessment. So our audit procedures have just been our usual testing of material revenue items, and this testing is complete, and we've got no issues or matters to report to date. Similarly, we are required to consider whether there's a risk of fraud in expenditure recognition. Again, we can rebut the risk if we deem that appropriate, and in our audit plan we did report that we didn't think this particular risk impacts the council. There's nothing identified in our work to date that changes that risk assessment. And again, our testing completed to date has not identified any matters to report to this committee. Management override of controls is a presumed risk that is non-rebutable, and the procedures that we perform under this risk are largely focused on manual journals posted to the ledger that impact the accounts. Looking at significant and unusual transactions, and also gaining understanding and reviewing the council's significant accounting estimates, and considering whether there's any bias in judgments and assumptions that are applied in those estimates. We've not identified any issues to report to date. Our testing is largely complete. In the prior year audit, we did identify that there was no automated journal controls in place on the Civica financial system that prevented members of staff from approving their own journals. Pleased to say that control has been implemented during the year, although not in place for the full year. That we can see that recommendation has been progressed, and we've had no further issues to report. Page 15. This gives a summary of our work on the valuation of land and buildings and investment properties, which is a significant estimate in the council's accounts due to the nature of the sensitivity of the assumptions that go into the valuation of land and buildings. We are well progressed with this work. The council employs an external valuer to revalue all of the land and buildings and investment properties on a cyclical basis. We've reviewed the work that the value has done for the assets due to be revalued, land and building assets due to be revalued for this year, and all of the investment properties that are revalued annually as well. We've got a number of inquiries ongoing with the valuer and with management, and that's just around some of the supporting information for the key data that goes into the valuation, such as kind of floor areas and things like that, and also looking at the work that's been done on assets that haven't been subject to a full revaluation this year. So there's a desktop review done on land and building properties that are not subject to a full revaluation. to consider the risk that they are misstated, and the work in that area continues as well. We have identified a issue with how depreciation has been applied to some revalue properties. Normally, we'd expect depreciation to be applied on the opening balance. So, land and building properties we expect to be revalued at the end of the year, the reporting date, 31st of March, and therefore depreciation would be charged throughout the year based on the opening balance. We've identified some cases where that's not been applied correctly, and that's led to an immaterial misstatement, which we've discussed with management. I believe is going to be adjusted, and that's not included in the set of accounts that are on the agenda after this. That's still to be amended. Over the page 16. So the other really significant estimate in the council accounts is the valuation of the pension fund. Now, this is a highly sensitive estimate due to the assumptions again that go into it. And this year, the pension fund has actually changed into a significant surplus, wherever it's previously been in a liability position, and that's as a result of the latest triennial revaluation, which was conducted at 31st of March 2022. And that's resulted in a net pension surplus of 12.5 million, which is in the recognised as an asset in the council's accounts. When a pension fund swings into a surplus position, there is a consideration of whether IFRIC 14 applies, which is an accounting standard that applies to specifically to pension funds. And there's a consideration required of whether that asset can be fully recognised. And that's because of the basis that for most pension fund surpluses, there is a recognition that essentially contributions to a pension fund can never be refunded, if you like. They're in the once they're paid, they're in the fund. So you have to consider whether that asset truly represents an asset, because the council has limited powers to actually recover any economic value from that asset. And therefore, IFRIC 14 sets out how, if any, asset should be recognised. And we recommended that the council obtain an assessment from the actuaries in the pension fund to consider the requirements of IFRIC 14, which we received earlier this week. And that has actually concluded that the pension asset should not be recognised in the accounts. So we will be reviewing that and expecting that to be adjusted in the final set of accounts as well. So it's quite a significant adjustment to be amended in the accounts, but we'll work that through with management. Then over the page 17, this page just summarises some of the findings from our IT controls review, which is a more in-depth piece of work that we've done for the first time this year, and that's required by the change in auditing standards, ISA 315, which requires us to look at the effectiveness of, the design and implementation of controls that support the key financial systems that produce the accounts, so primarily the Civica General Ledger. What we've identified in that review are some deficiencies as set out on page 17. So the IT controls review, we're required to consider kind of security and access management and change management, and how job scheduling and kind of infrastructure technology infrastructure is managed. What I've identified is some areas where the processes that were in place during the year that were under review are not in line with what we've considered to be best practice. So this work is still to be concluded, and we'll provide a kind of more full detail of the issues and recommendations. But to date, we've just identified some issues with primarily around user access. So one issue being that there's no periodic review of all users on the network. There is within the financial team, but not across kind of the whole IT network. And when we've actually looked at some specific individuals who've joined the council and left the council, and looked at the dates when their access was removed, we've identified some cases where the access actually wasn't removed for a considerable few months after they've actually left the organisation. So obviously that's not what we'd expect to see. And then again, at the time for the year under review that the council didn't have a formal change management policy in place, and actually the availability of information around changes that have been made to the IT applications has not been readily available for review. Page 18, this just summarises our work today on the group accounts. So, as I mentioned earlier, the council is required to consolidate the accounts of South Ribble Leisure into the council's accounts and prepare a group balance sheet and a group comprehensive income and expenditure statement. So, for the group accounts, we look at the actual mechanics of how those group accounts are produced and the figures are combined together. And then we're also required to test the material transactions and balances in the South Ribble Leisure Company as well, which is primarily the income and expenditure and also the pension fund balances as well. No issues to report from that work to date, and hoping that we can conclude. The next few pages in the report from page 19 cover a more detailed summary of the key estimates, which as we've covered earlier, the land and buildings and investment properties, where we look at and this summary just sets out, the areas that we look at, which is looking at the capability of management experts, so the external valuer that's been commissioned. We look at the accuracy and completeness of the information that's been provided to the valuer to make those estimates to the valuations. And we look at any changes to the methods that have used, and also look at consistency, and we look at other similar properties, maybe not owned by the council, and we use that to corroborate the reasonableness of estimates. I say the work in this area is ongoing, but we've got no significant issues to report to date. The pension fund, page 20, again, just sets out our approach to the more detailed summary of that estimate. We do obtain assurances from different areas of work on this. So one is we have access to the PwC report that gives a summary of the actual actuaries that are employed by the council, so Mercer in this case. So that gives us some assurance over the competency and qualifications of the actuaries' work performed on behalf of the council to calculate the pension balances. We also get some direct assurances from the pension fund auditor as well to give us confirmation of the council's pension balances for the current year. The other estimates are the NNDR appeals provision, where we've got no issues to report. Again, that work is nearing completion. And we also look at the council's minimum revenue provision as well. I'm on page 22 in the pack, where we look at how the MRP has been calculated and whether that's in line with the council's policy and the statutory guidance. And we've got no issues to report in that area as well. I'll just jump to page 24. This just summarises our other matters we're required to report. The main one being that we've included a draft letter of representation from management, which is included in Appendix G in the back of the report, and we ask this committee to consider that draft letter as well, and to approve that to be issued from the council to us for the conclusion of the audit. Then the only area I just wanted to cover is page 31, where again we just request the committee's acknowledgement of this. So this page sets out our non-audit fees charged during the year, and this primarily relates to the certification of the housing benefit claim for 21-22 and also for 22-23. So this page summarises the fees that Grant Thornton charges for this work in addition to the main audit fee, and that's set out there for transparency. That's all I wanted to say on the report, Chair, but happy to take any questions.
Thank you very much, Matt. Well presented. Okay. Let's open that for debate then. Questions, anyone?
Yeah, thank you, Chair. It's okay if I sit down. It's It's just a few comments, really. I noticed the investment property values have fallen, which you'd expect with interest rates going up because they're interest rate sensitive. And I was quite surprised to see a pension surplus because a third of the pension's assets are invested in interest rate sensitive areas, like the property and infrastructure, for example. It's almost a third. So I'd expect and the private equity as well, I'd expect the values to be lower. And I'm just wondering, should I, member of the pensions committee, be raising some questions at the next pensions committee as to how the private equity assets and the infrastructure assets are valued? How often are they valued? Because they might be out of date. Because as we've seen with the investment property values falling, the chances are that the interest rate sensitive pension assets have fallen as well. It might be that, I think you mention in March 22, the pension was valued, or was it March 23? Sorry, you said 23.
22, sorry, yes.
22, yeah, so that could be the reason. So when we get into the next period, we could actually see the pension value surplus disappear because they value the assets. But I think it's worthwhile asking our committee member to raise those questions at the next committee meeting with the pension people, if that's possible. It would be interesting to find out how often they value those assets, because you might have answered the question with March 22, but I suspect March 23 we'll see a completely different picture. But it's worthwhile making those inquiries. Cyber security is an interesting one. As we know, with artificial intelligence and all the cyber security attacks that's happening at the moment, very important area that we should be developing. And on page 17, there was where it said. There's page 17. It says under auditor view, management response was blank. I'm just wondering if that was purposely left blank, or should we get some response, management response there? I think that's it. Thank you.
Do you want to come back, Matt?
Sorry, yeah. Yes, so just to clarify on the pensions assets, so the pension balances have been valued and calculated by the actuary as at 31st of March 2023 for the purpose of the accounts. But what happened in March 2022 was every 3 years the pension fund is subject to what's called the triennial review. So every 3 years they do a wholesale recalculation of all the liabilities for the pension fund, whereas in the intervening years they essentially roll it forward, using indexation and things like that. But as a result of the latest triennial review and the change in interest rates, that has obviously affected the discount rate that's applied to liabilities significantly. And that's one of the primary reasons for the change in the pension liabilities. I couldn't comment on the assets, but they are obviously valued every year as part of the pension fund, and we get that assurance from the pension fund auditor as well. Louise come in on the management responses, but we have discussed that in our final report, management will provide responses to the recommendations, but because this work's it's not concluded yet, and we haven't included them yet.
Thanks, Matt. Would you like to come in there?
Sorry. Just to comment on the management responses. So obviously we've just got the report, gone through the report and published it for tonight. It's still in its draft form, and it could well be that there are further recommendations that are brought forward, and we will respond to all of them in the final audit findings report that Grant Thornton bring, and that will be brought to hopefully the next governance committee meeting, which will be in January.
Thank you, Louise. Are you happy with that, Damien? That's okay. Okay. Are there any other questions on this item? Yes, Margaret, and then.
Thank you, Mr. Chairman. On page 10, we talk about significant weaknesses in regard to the arrangements for procurement and the onboarding of external contractors. And it then refers us to Section 3 for value for money. But it doesn't actually say in that value for money exactly what's happening and where we're going with it, only that it is ongoing. I'm just wondering, it's obvious a continuation from 2021-22, and we're now 22-23. It is significant, is procurement, and we have had instances in recent times that they haven't gone out to the chests. They've been awarded in a different way, and we are going to have at some point some workshops, hopefully, to tell us about the way procurement is. I'm just wondering how much further along the road do you think it's going to be before you actually give us some guidance as to what is happening with procurement, because it does seem to be drifting along at the moment with the value for money. And I know there are problems there, but it would be interesting to know your thought process. And the other thing, I'd just like to follow up on Councillor Brereton's comments about the pension fund. You did mention that you've now had, forgive me if I've got this wrong because you were speaking quite quickly, that you've now had guidance that it is not an asset and therefore won't be in the balance sheet. So it's got to be a significant change of direction as to how that is put forward. What sort of figures are we talking about? Are we talking about the value of the pension fund that it has increased by, or another figure? It's all a bit confusing, is pension funds. And it must be unusual to have a pension fund that has actually gone into surplus. Most pension funds, from what you read in the papers, are actually way, way in deficit. And I think somewhere in the accounts, it does talk about if it's in deficit, sometimes we have to actually top it up. But there is some comment, I think, about maybe reducing the contributions by the people who are actually putting the money in. But I mean, by 12 months down the line, it could flip again. So are we clear on exactly how we're going forward with that? Thank you.
Cool. So in terms, I'll take the pension question first. So in terms of the change to the accounts, the net asset is 12.5 million. So that's, you know, how much the value of the assets exceed the liabilities. So the IFRIC 14 assessment has concluded that it's not appropriate to recognise that asset. So essentially the adjustment would be to reduce that down to nil. So effectively, the pension fund would be in balance, if that makes sense, in the accounts. It doesn't change anything with the actual pension fund balances. It's purely an accounting adjustment. So at the moment, the council has an asset of 12.5 million in the balance sheet, representing the pension fund surplus. That would be removed to zero. Essentially, is the change.
So does that take the assets of the council down by 12 million in the balance sheet?
Yes, the effect of that would be that it reduces the balance sheet position. And then value for money. Yes. So the work on the areas identified of significant weakness in the prior year around procurement was, very specific around the onboarding of contractors and the management of contractors, but then also around capacity in the procurement team as well. And both of those issues we are, looking at as part of our follow-up work. We made some key recommendations in the prior year report. So part of our work this year will be looking at management's progress with those recommendations, some of which were in progress, obviously, at the time of our reporting anyway, and others where there was work still to do, and we'll be following up on that. With no issues to report to date, as I say, but we aim to report our full auditor's annual report in the January Governance Committee as well. 24, yeah.
And before I bring you in, and Peter, can I just ask Louise to come in and maybe clarify a few points?
It was Councillor Smith, just in relation to the pension fund. You mentioned a lot of pension funds are in deficit, and it's unusual for there to be a surplus. I think pretty much across the majority of the Lancashire pension funds this time were in surplus, and the approach that we've taken in including the surplus as an asset, we had discussions with colleagues to see how everybody else was approaching it, because it was quite an unusual set of circumstances. And this was, we kind of went with the majority. So I think Grant Thornton will find from their other clients, a lot of people have done it in exactly the same way. It was only then when we had to seek further assurances that the actuary who acts on behalf of all of the pension sections has come back and said they didn't feel that the asset should be recognised. So it will be something that pretty much everybody is having to adjust in their accounts. And the reference in the accounts to having to make additional contributions because of previously in previous years where the liability exceeded the assets. What happened was an arrangement was put in place where everybody who had a pension deficit was trying to repay that deficit over a 25-year period, and we got part way through that. I think we got down to about 14 or 16 years left, and now obviously the environment is completely different. We've had a positive surplus, and therefore that has been suspended. But that doesn't mean to say in future years, if something happened with global economies and we ended up in deficit again, that they wouldn't come back and say we need to reinstigate a recovery plan. But at the moment, it's that element that has been suspended. But we are still making deductions from employees every month and contributing our employer's contribution every month on everybody's salary. That hasn't been reduced in any way, shape or form, if that helps. Yeah.
Councillor Turner.
Thank you, Chair. Yeah, just a point of clarification and understanding, Matt. On page 24, financial statements, it lists out some issues there. I was just interested in where it has a criteria for matters in relation to related parties, and it says, we are not aware of any related parties or related party transactions which have not been disclosed. Can you give me some examples of what that is? Because I don't know which sort of, in a sort of family tree thing, what parties we're talking about. I'm just interested. Thanks.
Sure, you're testing my accounting knowledge here, but the definition of a related party is a transaction between two parties where there's people that have significant influence over those parties jointly. That makes sense. So, for instance, if an officer, a senior officer, also had a company that was contracting with the council, those two companies would be related parties because a single person has influence over both, and then there's transactions between the two. That that's an example. There are kind of tiered levels of whether you consider something a related party depending on how close the relationship is. So, for instance, if somebody's close family member has a business or a company that contracts with the council, that would be considered a close family member of somebody who has influence in the council. That would be considered to be a related party. But obviously only if there are transactions. They're not a related party if there are no transactions taking place.
Peter.
Thanks, Chair. And Louise answered my question in response to Councillor Smith's point. That was all.
Yep.
Thanks, Chair. Excuse me. Thanks, Matt. I'd like to say it was exciting stuff, and you got me the festive spirit. You didn't, but it was. It's very important stuff. So thank you and the team for all your work. I can, on the pension stuff, I can see why the team took the approach they took. I never personally quite saw it as an asset, so I think where we've ended up is probably a good space. Just in terms of kind of continuous improvement and looking forward as a committee, probably more of a question for Louise and Chris, but in terms of some of the gaps that have been found or the areas we can maybe improve, i.e. I think Damien mentioned cybersecurity, I think there are a few others I looked at. I'm sure there'll be elements where some of them, because time's already passed, there's already things in place, or there's a system in place now, and there still might be a few areas we can improve on. I didn't quite hear you, Louise, but was it you're saying in January we get more of a comprehensive kind of, there might be some areas identified where we'd look at them as with management and internal audit and kind of try and mitigate against some of them areas in the future?
Yes. So in January, at the next governance committee, what we'll hopefully bring back, Matt and Georgia will bring back their kind of final audit findings report, which will contain those 2 recommendations with a full management response, but it also might include further management recommendations for management to respond to once the audit is concluded. Those now we've got the report, those have been identified. I can say I have passed those on to Asim, who is looking at those, and he will be formulating his response. Some of them we know have already been dealt with, but obviously the focus of the audit is for the year ended March 2023. We know some policies have been put in place and work has been done in kind of April and May. And that will inform the response that they have already been dealt with, and this is when they were dealt with. There'll be other things that are ongoing, and there'll be other things that have yet to be addressed. So that will be brought to the attention of committee in hopefully in January.
That's really helpful. Thank you very much.
Thank you. Are there any other comments or questions for Matt? None? Okay. Well, that item is for noting. We can move on. Thank you very much, Matt. Item 5, statement of accounts. This is the biggie. It must be the biggie because 155 pages in the. Over to you, Liz.
So I'm going to hand over to Jeannie to present the accounts. But I think just before she does, and I just wanted to say really, that. It's a massive document and a massive amount of work that goes into producing that. There's been an awful lot of turnover within the finance team over the past 12, 18 months. And so this year, the approach has been pretty much every single person within the team has been involved in some form or another in putting them together, which has been, a hugely significant piece of work and a steep learning curve that I'm really proud to say people have kind of come through and managed. And without further ado, I'll hand over to Jeannie.
Thank you. So this is the report that presents for approval the audited statement of accounts for 22-23. I think some of the issues we've already covered in Matt's report and what's been discussed. So if I repeat those, then I'll apologise in advance. The recommendations of the report are in paragraphs 2 to 5. And this is the recommendation that the accounts are approved subject to any amendments as a result of the ongoing audit work that are minor and non-material in the opinion of the finance director, and that the authority to agree the amendments is delegated to the Director of Finance in consultation with the Chair of the Governance Committee. And if there are any amendments that are necessary that are deemed to be material, then the statement of accounts will come back to Governance Committee in January for approval. And I think we've concluded with the discussion about the pensions that it's likely to be coming back in January. As Matt said, we only had the report from Lancashire Pensions in the last couple of days, and so we are still reviewing that and what impact it will have on the final accounts. Also in the recommendations is that the Director of Finance and the Chair of the Governance Committee are authorised to sign the letter of representation, which is Appendix B in this report. And the reason we do it all is because approval of the annual accounts is a statutory obligation. So the draft statement of accounts were published on the council's website on the 14th of August, and the audit also began then. and we've been working through the audit and audit queries since then. As Matt's just reported, it's nearing completion, but we've had some issues that are still to be completed, particularly the pensions and some queries on the asset register where we're dependent on external advice. So, but hopefully those will all be concluded fairly soon. The target deadline for final approval and publication of the accounts was 30th of November, which we obviously won't hit, but hopefully we will have concluded by the end of the calendar year. So the main components of the statement and the numbers in detail we looked at in the session last week. And obviously that took some time, so I'm not going to go through every single number again. Just some headline figures from the comprehensive statement of income and expenditure are an operating surplus of 3.827 million and an increase in the council's property, plans and equipment of 2.189 million. You'll notice on the balance sheet that there's a marked increase in assets, and this is in large part due to the pension revaluation, but obviously that's now under review, and we'll come back probably with a new figure on that. There's a lot of detail on the numbers in the pack that accompanied the training session, explaining the various changes from the funding basis, which is how we report in the quarterly monitoring reports, to the numbers which go into the statutory accounts, which are produced on an accounting basis, which is how we're obliged to prepare them to make them comparable with other organisations and councils and companies across the UK. There's also information on the different reserves the council holds and the differences between these. So rather than go through those numbers, I just wondered if anybody has any questions for myself or Neil or Louise now, or having looked at the figures, happy to answer any questions later as well.
Thank you, Jean.
Thank you.
Before we move on, a couple of big thank yous from me. One, to the team, everybody involved in all the hard work, because it's a massive task, and also for putting on the training as well, because I found that very, very helpful. Thank you. And with that, I'll put it on for debate. Any questions for Jean or Louise? Kevin?
Thank you, Chair. On page 81 on the bar chart, I think that's what you call it. Is it a bar chart? A pie chart. Sorry. It says where the money came from, housing benefit 48%, but then where it was spent, 47%. I'm just wondering what the difference was. Was it a timing of paying out benefits, or if that can be explained? Page 81 on the pie chart. That was the first question. And on page 88, there was a comment there that says one of the risks, which looks like it's quite significant, is poor financial sustainability. And when we fast forward to page 139, it shows the financial assets falling from 58 to 39 million. It just seems like it's and the reserves are also falling. It just seems like there's a downward trend. And I'm just wondering, can we see that trend continuing? Can we see the poor financial sustainability, the financial assets, the reserves? Can we see the trend continuing? And if it does continue, what's the likelihood that we're going to have to reach out for external borrowings? Thank you.
Yeah. Sorry, can I, on the pie charts, I had a subsequent question which might be addressed by both at the same time, if that's okay. Yeah, my question was whether putting percentages is actually the best way of putting these
figures, because a percentage of total expenditure doesn't actually enable us to refer to the actual amount. And I wonder whether the pie charts would be better labelled with the actual amount spent rather than the percentage spent, because that's where I think the difference comes.
Good question. And do you want to start with, or do we ask Jean yourself?
Thank you. So in response to the first question on the pie chart, I won't remember all those questions, so one at a time. So on the pie chart, the top box is where the money was spent. So that is the expenditure side. And on the bottom pie chart, it's where the money came from. So that is money coming into us from government in respect of housing benefit, which represented 48% of the total amount of money that we get. Whereas the top pie chart is how it is all the proportionate elements of expenditure, and housing benefit represented 47% of our total expenditure. So it's coincidence that they are very close in numbers. Neil's going to say something on that.
There is a specific reason for that, and we actually recover overpayments from previous years. So as part of our budget, we actually recover. So it's not unusual that you would receive more money and then you pay out, because often there's been issues in previous years in terms of the assessments. They're reassessed, then we recover overpayments. So that's why there's always a slight difference.
And in response to the second point that was made, we take on board that and the percentages, and I think helpful if we can get them in where there's a percentage and a figure as well, so it gives you somewhat a sense of the total amount of pie that we are carving up. So we will take on board that for next year. The second point, I think, was on page 88, and that was in relation to the risks. So how these are presented is the risk that the council has poor financial sustainability. So without any measures in place, we scored that at 16. With the measures that we have in place to address that, we are able to reduce that to 12. But we are aiming to reduce that even further. Our target is that's reduced to an amber rating at 6. Now, the issue is around government funding and the lack of information that is provided to us, because we are only given settlements, and we have been for the past few years, 1 year at a time, which does not enable us to do any longer term financial planning. We have been lobbying, not just as this council, but across the country, across local government, to say we need a longer term financial settlement to get us on an even keel, so as we can do investment, knowing that we are going to have the resources in the future to continue it, rather than just living from 1st of April to 31st of March. So that's the element of sustainability that we have the biggest issue with. It is about cuts in funding streams. Yeah. And the final point, sorry.
It was page 139, the significant fall in the financial assets, cash on deposits and that kind of thing. And then we've got a downward trend in the reserves as well. And I'm just wondering, is that trend likely to continue? And if it does, will we have to reach out for external borrowings?
So to answer the first question in relation to cash, so we have undertaken capital or committed to undertake capital expenditure projects that will be funded by borrowing. However, the council does not have any borrowing, and that's recognition of the fact that we will borrow eventually, but we have significant cash balances, and there's many reasons for those cash balances. Some of it is reserves that have been built up. Some of it is just the peaks and troughs of inflows and outflows of expenditure over the course of the year. So, for example, we receive some grants up front. Towns Fund, various other schemes, various elements of government grants, where we get them up front, but then we spend them over the course of the year. That increases our cash balances, and therefore we don't need to borrow. But as we have got, and also I should say really as well, one of the biggest impacts on our cash balances was COVID monies, because we did get a lot of COVID monies, and again, as they have been spent, the cash balances have reduced. So we will, over time, reduce our cash balances, and we will get to a position where we do borrow, but decisions have already been taken that we will borrow, because those have been included in the capital expenditure decisions that council have made. And in terms of the reserve balances, that was on page, did you say?
Sorry, I didn't get that page.
But it shows 125 /things.
100, yeah. So on page 144, are usable reserves. So these are all of the reserves that are at the council's disposal that it can use. And at the end of the year, those are 33.754 million. And they were 35.054 million at the start of the year. So those have just changed by just over $1 million over the course of the year. So it's not hugely different.
Sorry, I was looking on page 125 at the bottom. There was a balance of in March 21. There was 27 million, and it's down to 21. So over a couple of years, it's fallen 6. Am I reading that incorrectly?
So these are the earmarked reserves, and these are the reserves that we report in the quarterly monitoring reports that come through to the exec to cabinet. And yes, as at the 31st of March 2021, you're correct, they were 27 million, now down to 21 million. But some of those big changes will also be connected with COVID reserves. And a big chunk of that, sorry, I should say, is the collection fund deficit distribution reserve, which was connected with COVID. In the early years, in the first year of COVID, because there were significant deficits that were expected to arise on council tax and business rates, because of the economic climate that followed. Instead of recovering all of the deficits in the following financial year, which is the normal practice, the government gave funding specifically for that and allowed local authorities to write it off over a 3-year period, and that's why we were holding 5.244 million back in 2021, which had reduced to 2.6 million at the end of March 23. So that's one of the biggest adjustments in there at 2.5 million.
Okay,
Thank you.
are there any other comments or questions? Wes?
Oh, thanks. Thanks, Chair. Sorry, Louise. It just might be helpful. Could you tell us a bit more in terms of contextualising us as a council in terms of what you observe elsewhere? So you talked about local government kind of having a lot of financial pressures and the sustainability of funding, and with the amount we're delivering as a council, it's pretty impressive to have no debt. And you're doing a great job as a team, but as a council, does it feel like we're in a healthier position compared to others with not having to borrow at the minute, or others in that you get a sense of it maybe of what you see elsewhere?
I think probably the best indicator is reports that we previously brought through to Governance Committee, which is the CIPFA Resilience Index. And those get published every year. It just takes a bit of a while for it to work its way through. But that looks at a range of measures. So it looks at the level of debt compared to the size of the organisation. It looks trying to think some of the other ratios that are in there. There's a suite of them in there. And what we did in those reports, which I can circulate again, we looked at South Ribble compared to its kind of nearest neighbours, not geographically nearest neighbours, but those which are of a similar size, a similar kind of socio-economic demographic composition, and how we fared against them. So they were in various places across the country, and South Ribble was performing extremely well against them. I think the area where we would look where we didn't score as well was on fees and charges, and other areas were managing to secure more income by raising fees and charges than South Ribble had. But obviously, the level of debt, there isn't any, so they were in a very strong position on that. But I'm happy to circulate that again. Yeah.
Thank you. That's really helpful.
Hi, thanks, Chair. I've got my queries about unusable reserves as well, actually. I know Damien commented on it. The little number 84. So it says here, movements in the authority's usable reserves are detailed in the movement reserve statement on page 42. So I'm looking at the total usable reserves at year end of the 33.7 million. So when I go back to, if I'm looking at this right, when I go back to page 42, it says, where I need help on this is, where's the 33.7 million in that table, Louise? I don't understand the table. Thank you.
Just check, when you say page 42, is that page 42 of the agenda pack or 102 of the agenda pack? Right.
So I'm using the numbers. So page 84.
Yes.
Page 84, it documents usable reserves.
Yeah. So
of 33.7 million. I'm trying to bridge that figure back to the reference it's made to the table at page 42, which I assumed was the little number. Maybe that's the issue I've got, because I can't see the 33.7 million in that movement in reserves statement at page 42 of the little figure. I just was trying to ask for some help. Yeah, you got it. Thank you.
Yep, that's fine. So on page 42 of the accounts, which is page 102 in the pack, is the movement in reserve statement, or the MERS as it's called. If you look at the first figure of the first column of figures, you can see on the very bottom line there is a balance at the 31st of March 2023 of 21.171 million, which then ties into note 24, which is the summary of usable reserves, which is on page 84 of the accounts or page 144 of the pack. So that's the tying up of the 21.171 million. And the total usable reserves at year end can be seen in the fourth column across. On the MERS statement, it's 33.755. There's a £1,000 rounding error in there, but that's how the two align.
Right.
That's okay. Thank you.
Thank you for that, Louise. Okay. Any other questions, comments on this item? None. Well, this one's for decision, isn't it? Yeah. Please do.
On the introduction, if I can find it. So talks about the introduction to the borough, which is quite interesting. We always find that. And it mentions all the settlements that are in the borough, as in Hemerdham and Longton and various places, and Hutton. And there's no mention of New Longton, which is quite a big settlement. Only a small piece. They get quite upset in New Longton if they've missed out.
I don't want to feel like we're leaving you out. Yeah. Anyone wish to comment on that?
We will make sure that's corrected, Councillor Smith.
Thank you, Chris. Okay. So this is for decision. Do I need to read out the recommendations? Do the members need me to read out the recommendations? Do you think? No? Okay. So we just need to a proposer and a seconder, please.
I'll propose them, Chair.
Okay. And we'll a show of hands for the vote. That's unanimous. Okay, moving on. Number 6, Treasury Management Mid-Year Review. And I think this one is Eugenie, is it?
Yes, it is. Thank you. So this is the Treasury Management Mid-Year Report. It's one of 3 that are required under the Treasury Management Code of Practice. We have the strategy, Treasury Management Strategy, as part of the budget in February time, the outturn in which is the end of year report, so that I think comes to committee in summer, and then this is the mid-year review. It presents the position of the council on any investment and or borrowing, and it's the position as at the 30th of September. So the first bit looks at capital expenditure, that's paragraphs 12 through to 20. Capital expenditure is monitored and reported on quarterly. We've got details of the forecast capital expenditure and the capital financing requirements are in this report in paragraphs 12 to 16. Capital expenditure can be financed either internally through capital revenue resources or externally, which gives the rise to the need to borrow. At South Ribble, the council is under-borrowed, which means it's used its own cash balances to finance capital expenditure rather than borrow externally, which obviously saves on interest payable. With the current planned capital expenditure, it's not envisaged that the council will have any borrowing requirements this financial year. The council investments are covered in paragraphs 21 through to 27. The overall approach to investments is security, then liquidity, then yield, in that order. The council holds cash in both fixed term deposits, where the money's tied up for a specified amount of time, and in call accounts and money market funds, where the cash is available instantly to meet need. Investment returns have been good in the 6 months from April to September 23, obviously in line with interest rates as compared to interest rates in the previous year. The average daily balance was 42.6 million. It was 51.1 last year. The average yield was 3.85% compared with 1.64% last year. and the council's had a return of £824,000 in these 6 months, compared to £833,000 for all of last year. So it's almost double. So in summary, it's really positive. Council's remained within its prudential indicators. It's adhered to its approved counterparty limits. It's not entered into any borrowing. It's retained its under-borrow position, and it's achieved an increased investment yield of 3.85%. Members are asked to note the report, and any questions, happy to take them. Thank you.
Thank you, Jean. Yeah, it is a very positive report. But do we have any questions?
If you will indulge me, Mr. Chairman, it isn't a question, it is more a comment. But I would like to say it is a very positive report, and I think it's very pleasing to see the fact that we have got this investment return coming in. As a borough, over many, many years, and it's not just in recent years, in many, many years, we have been a debt-free council. And the fact that we are able to put money out onto the money market to other councils, I think is a credit to what is now and what has gone before. Because to be in that position is extremely useful. And many, many councils would envy the position that we've been in over many years as being a debt-free council. And I hope it would continue that way. Thank you.
Thank you, Margaret. I think we'd all agree with that. Are there any other further questions? None? Yeah, go on.
Sorry, I agree with it to a certain degree. Louise, could you, or Jeannie, could you just talk a little bit about what, at the point when it comes to a tipping point of the context of there's going to come a point where we're going to have to borrow. We know that, we've committed to that. We're just not at the minute. Will we still be in a healthy kind of within our authorised limit and within the operational boundary? Will we sit quite comfortable in that when it comes to the tipping point?
So the operational and the authorised limits, they'll be set and approved by this committee in February, and we will remain within those because obviously we plan to do so. And when we are looking ahead, obviously, like Neil and Louise and I have been talking about, the next 12 to 24 months and what might be needed cash wise. So we would always remain within those limits, regardless, I think, of what the council plans to do, because obviously plans come to you and you know what the limits are. So it should regulate itself, really.
Thank you. Any other points or questions for Jeannie? No? Yes.
Cheers. Thanks for your report, Jean. Yeah, can I just take you back to page 216? This is a page that's got one number on it. It's just a question there. I'm sure everything's okay, but at paragraph 27, it says we have, if I've read this right, we have £6 million invested with Chorley Borough Council. Yeah, okay, that's all right. You can just nod your head. You don't have to. But it's been published that Chorley Borough Council is £79 million in debt. So if that's the case, have you looked at whether there is a genuine risk there of that investment that we've got with them, or is there reasons why it's not an issue? Thanks.
So most of the borrowing profile with Chorley is long-term loans with the PWLB. Its arrangement with, sorry, can you hear me now? Yes. So most of the arrangements with Chorley's loans are long-term loans with the PWLB, and that is factored in to the accounts every year. This is a short-term loan, which is repayable on the 15th of January. And again, that's factored into our cash flow. So there's no risk. there's no more risk because the councils are sort of physically close, if you were, than there is with any of the other investments. They're all done at arm's length. Does that answer the question?
But it's not a risk just because Chorley Council is £79 million in debt, because I think what you're saying is that's a long-term debt that's serviceable.
Yes, yeah.
So actually, in reality, if it's as long as it's serviceable, it's not really a warning sign, is it? It's not really lots of businesses have debts as long as they can cover them. So therefore, our £6 million that we've invested with them isn't at risk.
It's not at risk, no.
Right. Okay. Thanks. Just interested.
Just to pick up on that point, I think. Just to say, yeah, that specific debt, as Jeannie said, is due back in January, and a lot of the PWLB borrowing that Chorley has taken out is due back in 25 years, in 50. It's of a length. But every council, and going back to the CITFRA Resilience Index, every council is viewed on their ability to repay the debt. If there was a problem at all of a council unable to service its debt, then it would be producing a deficit, and that would ring alarm bells for government. But one of the things I think, so some of the councils that have failed, so the Thurrocks and the Northamptonshires, all of those who have issued Section 114 notices have not defaulted on any of their payments. What has happened is in some of them, they've been allowed to borrow more money in order to be able to pay back the debt. They've capitalised the deficit that they've got, and they will pay it back over a period of time to government. So I can obviously we are in a position where we have a shared service, so we have information that you wouldn't necessarily have on some of the other councils that are listed there, but we do our due diligence to the best of our abilities and ensure that we've started to hold back in terms of when amounts become available or people are interested in taking our investments. I do have a list of people that or not people, but organisations, councils elsewhere in the country, and we would think twice before we lent money to them, although I'm pretty sure that they are a safe bet because it is underwritten by government.
Thanks, Colin. Being somewhat unique in terms that I was an ex-Chorley councillor as well, I think as Councillor Turner mentioned, if it's serviceable, I think quite a lot of the debt that we had all was serviceable. We had sort of surpluses after repaying the borrowing costs in the millions. I think Market Walk itself, when it was brought in-house, that had over £1 million surplus that all helped. So it sort of going back to something Councillor Smith said, if there is something sometimes where you can borrow money to get a surplus, the amount of the millions that you're generating there in a different council, the amount that'd take in council tax rises for the residents of, say, our council to try and make up that difference is ridiculous. So sometimes if there is something that is useful, we can should always look at it and look at what the best interests are of our residents. But going back to paragraph 26, which was my question, which just details the amount of earnings we've made over the year for the interest, to date. If we're looking at the benchmark yield, it's 4.74, so we're still a bit below that, and it goes on to explain that. Just to confirm, are we looking for the interest to be even higher next time we report it as we start lending on more favourable terms? So.
Yeah. So yes, we've been able to generate quite a bit of money on if you look at point 27, it states where all of our investments are at this at the 30th of September, and you can see that the interest that we are generating there, to other councils. So we've got one with the Borough of Barking and Dagenham at 5.4%, 5.3% with Stockport, and also down at the bottom, the amount we get with our money market funds, so 5.2, 5.21. And those represent what the interest rates were when we put those deposits on in September. Obviously, earlier in the year, when we took them out, we were getting a lower interest rates. It's just reflective of the fact interest rates have gone higher. So if we, as money comes off deposit and we reinvest it, then we can get better rates for as long as those interest rates prevail. But we are expecting, I think the Bank of England did say that they expected interest rates to start to reduce in December. They've revised that forecast. So it's going to prevail at these rates for a little bit longer. And it's probably, if we're going to see a reduction, it's going to be into kind of mid next year before we see anything and a deterioration in the interest rate. So we do expect to be able to make significant returns on our investments definitely for about the next 6 months for sure.
Okay.
Cool. Yeah, just a comment about those figures that related to Chorley and its debt. I saw the table in the press in the context of Birmingham's situation with a list of councils that were indebted, and it was it's just totally. It had nothing to do with no mention of the assets that the councils had and the income coming in from the assets. So the table was a totally misleading representation of the situation of health for those councils in the list.
Thank you, Pete. Anything else anybody needs to add? No? Okay, this one's just for noting. Duly noted. The final item is the Constitution update. Mr. Moisty, you've been sat there quietly, waiting your turn. Here it is.
Thank you, Chair. Yes, hopefully this will be relatively straightforward. This report is before you. It's part of the ongoing programme to review different elements of the Constitution. So the area I was concentrating on was the responsibility for functions and scheme of delegation. The report is quite short in relation to the proposed amendments, mainly because the section was actually still fit for purpose. So the responsibility for functions was still suitable, and the scheme of delegation still works for this authority. What I have, though, just referenced is that that I'd picked up was that the portfolios haven't been updated in the Constitution following decisions of the Council, and the Community Hub with changes that were made in year hadn't been updated after those changes were agreed. So that's the proposed changes in the appendices to the reports, and that's the report, Chair.
Thank you, Chris. Any comments, any questions? Peter?
I just want to say I think Councillor Smith will be really excited that on page 229 New Longton is mentioned, so Chris has obviously done a good job there.
Thank you for pointing that out, Peter. Yeah. Oh dear, we'll get there in the end. Any other comments or questions or points? No, none at all. Well, that is also for noting. And at that, I think we've completed the meeting. Thank you, everybody, for your attendance and your contributions. Is it for noting? It is for noting, I think, yeah.
Oh, sorry.
Oh, so it isn't for noting. It's
sorry, if I can, Chair. The recommendation was actually when I thought I'd be doing more serious changes to the report. So actually, the proposed wording implements changes that have already been made by full council, so it doesn't need to go back to full council. And there aren't any proposed changes to the responsibility for functions or scheme of delegation.
Yeah. That's it. Thank you very much. Thank you for your job.